What do you want to do?
Let me just get this started here. And just wanted to, if one of our online guests can just in the chat, can you confirm that that you can hear me? Yep. Okay, we got a thumbs up. So let me take front and center here for a minute.
Yeah, go. I'm going to get it right out of the way.
So, all right, guys. Juan, Loya here with Neighborhood Loans. Super excited to have you guys that came in to be with us here, plus our guests that we have online today. We're going to be talking about VA loans, how to use VA loans in today's market. How is that going to affect? How is that going to affect? With the new NAR rules, what does that do for us? And then we also want to help you guys put together some marketing, some social media marketing to not only teach you guys the program, but hey, how do we go get some clients? Because we want you guys cashing checks as soon as possible, right? And if your phone rings again, we're going to make you come up and dance, sing and dance, right? So today we have our resident VA expert on the team, Mr. Dylan Kramer, who has years and years and years of experience, been doing VA forever. He's actually our sales manager on our team just for VA. So it's an important program for us. We're super excited to be offering this to you, and super excited that Dylan is on our team leading the charge. So I'll let you take the stage.
Awesome. Thanks, Juan. Appreciate it. Hey, everybody. Thanks for joining us today. I am, as Juan said, the newest member of the team here at Neighborhood Loans, and we're excited to share with you today the message about serving veterans. My contact information is here. No matter who your loan officer is on the team, whether it's Rafael or Pete or Juan or anybody else, I am now a resource to help you get veterans to closing. I come from a place of serving veterans at the highest level and making sure that they get the opportunity to take advantage of their VA home loan benefit. It's with the most, I think, the most attractive loan in the market. And if you're eligible for it, you should look to take advantage of it. But I also think in the real estate community, it's the most misunderstood one that's out there. So I want to turn around and talk about that. I know you're adjusting the camera. Let's do that, and then we can move the screen.
Yep.
Perfect. So the first thing I want to talk about from a little bit of background is how did I come to get involved in VA loans? And the reason I do that, and what you see up here on the screen, is the logo for a charity event that's going to go on in the next couple of weeks. And it's a charity event that was run by a company that I was affiliated with for years. And it's called the Boot Shoot. And why is it called the Boot Shoot? Well, because it's like a golf outing with shotguns for veterans. And I kid you not, I've been to it. It's hosted every April for 10 or 11 years now. And the cool thing about this event is it is run to generate scholarships for military veterans who have had challenges. And so there's always a couple of charities that get involved. One of the important charities that is served by this event, and this event probably raises $1 million over the course of 2 days. It's a massive event. The winner of that scholarship is sent, or scholarships is sent to the Brain Injury Foundation in San Diego, and they do great work there, and they help veterans through those injuries that you read about that they can't physically see, but that they have going on. And one of the things that happened in that environment is one of the scholarship winners was in there getting taken care of and going through his treatments. And he was there with the owners of the company and the head of the charity, as well as his wife and his doctors and the Brain Injury Foundation doctors. And his wife would excuse herself and leave the room and then come back and do that again after, phone rings, texts, et cetera, et cetera. And finally, after about a day of this, the guy who was the head of the charity looked at her and said, "What are you doing? Like, your husband is here for this important treatment and you can't listen to the doctors. You're not paying attention. You're not participating in his treatment. And kind of gave her an earful, at which point she broke down in tears and confided in him that she was talking to, every time she left the room, her lender. They were trying to get a house approved that included some construction work to accommodate his disabilities. And that work was not completed, and they basically were not pre-approved correctly and couldn't get the loan done. And he scratched his head and he said, "You know, I own a mortgage company, right?" And she was like, "Yes, but you've done so much for us and we can't really ask you for any more favors. And I thought we could get this handled ourselves." And long story short, at that point, we decided as a company that our mission to serve veterans was even more important, because too many companies that are in the business right now wrap themselves in the flag and will talk to consumers, veterans who've served our country, and treat them horribly, not do their pre-approval, not take care of business on the front end, and not ensure that they're going to go to closing. So it became our mission to turn around and serve veterans at the highest possible level. That's the why, because they're not being taken care of in the market. Juan, if you can move the screen. So once we're done with that, then the question becomes, hey, what's our opportunity in this market? Let's talk about veterans generally. Veterans, and sorry to turn around and read the screen, but it's too small on the phone. Veteran home ownership exceeds the national average by a bit. It's 16%. But only 14% of the eligible veterans use their VA home loan benefit. And that, I think, is a big opportunity to take advantage of it. Military personnel are moved every 2 to 5 years. You can be an active member of the military and still take advantage of your VA home loan benefit. State of Illinois has 717,000 veterans. We have at least one in the room. Anybody else? So thank you again for your service. But we only had 6,500 VA loan purchases last year. That's a small number. It's less than 1%. Now, is everybody moving every year? Of course not. We know that. But the fact of the matter is there's an untapped opportunity when less than 1% of the eligible borrowers take advantage of a loan program. So that's the big number. Let's move the screen again. So our mission here at Neighborhood Loans is to make sure that every service member understands their earned benefit. I think it's important when you talk to veterans that you help them understand that they can achieve their American dream of home ownership, and they have earned the right to take advantage of their VA home loan benefit. The one thing that I would tell you is veterans don't often understand that benefit. As it's been told to me, and I'm the first to admit up front, I'm here to serve veterans, but I did not get the opportunity when I was a young man to serve our country. So I am going to say what I say next, and it's hearsay. But when you get discharged from the military, you basically get a day, a half a day of like, here's all the stuff for you to go back to the civilian world. And in that discussion is like, oh, hey, here's your home loan benefit. There's not a big detail on what might be the best financial opportunity you have. The other thing that happens is too often real estate professionals and well-meaning relatives will dissuade veterans from taking advantage of their benefit. And additionally, sometimes veterans will feel like they're not interested in that benefit because it's a handout, but it's not. It is an earned benefit. And understanding that difference when you're talking with veterans is a really important difference in terms of serving them at a high level and helping them understand that this is not a government handout for them, but it is an earned benefit.
Yeah, huge.
Yeah. So 3 questions I want you to ask everybody when you start talking to them. And sometimes you can look for cues, right, of folks that may have served, but sometimes not. So question number 1, have you or your spouse served in the military? Now that's a yes or no question. It's pretty simple and straightforward. If they did, obviously, thank them for their service. But more importantly, you can then open a discussion about, hey, can we talk a little bit about how you understand your VA home loan benefit? In addition, if you did serve, question number 2, are you entitled to disability from the VA? That becomes important in qualifying borrowers for 2 reasons. And I'll brief them here. You don't have to make notes of this because this is a loan specific thing, but I think the benefit is important for you as the real estate professional to understand why this question is so important for the lender. Because when we know this, we know 2 things. If they have a certain level of disability, they are entitled to a waiver of the VA funding fee, which can be as much as, depending on if they've used their VA benefit before, as much as 3% of their loan amount. Now, much like an FHA loan, it gets rolled in. You don't pay that in cash, which obviously is a hot button, paying things in cash based on the NAR decision last week. But more importantly, is that waiver is available. And so we want to understand if they have that disability. The second thing is, in the state of Illinois, they may be able to plan for owning a house with a eliminated tax bill, because depending on the, again, don't quote me on the rules right here because every situation is a little different, but if you can get them, and I have used successfully qualifying without a tax bill to get a veteran into a house. And so if they're going to be qualified for the benefit of the waiver of the property taxes due to their veteran's disability, you want to understand that they have that disability so that we can work with that on the front end in the pre-approval. And finally, do you have your certificate of eligibility? As I described it earlier in the conversation about our veteran family that was at the Brain Injury Foundation, the big mistake that pre-approval made was they didn't, and I see this one is the biggest mistake ever. If you have a call center shop, and I loathe to name names, but they advertise on football games and golf tournaments on Sundays, you'd recognize them, right? Those companies are literally just call center shops, much like Rocket Mortgage is a call center shop, just to pull a number out of the air. They wrap themselves in the flag, but they hire underskilled loan officers who've not been in the business a long time. So we all know the trick. I'm sure everybody has seen where you turn around and you say, hey, I went to the NMLS site and I found out that your guy was working at Applebee's last week and he's quoting you on your loan now. Well, that happens too often in call centers just like this. The part they skip is the certificate of eligibility. And you have to have a pre-approval with a certificate of eligibility, because if you don't, there's no talking to underwriting, there's no waiver, there's no, hey, let me work on that and we'll see if we get a workaround. Your certificate of eligibility will tell you if your veteran is eligible for the program, period, end of story. It is the most important document. So these 3 questions kind of go in order, right? Doesn't matter if you haven't served in the military, questions 2 and 3 don't matter. If you're entitled to disability, that's great information to know.
Regarding the certificate.
Yeah.
It's been 30 years since I used mine. I
Sure.
don't know if I still have it.
Right.
Contact the VA or.
Yes, as a matter of fact, what we'll do for everybody in attendance is we'll send out a link to get your certificate of eligibility if you're interested in it, or for your veteran buyers. So be happy to turn around and do that. The thing is that we are happy to do that as part of every pre-approval for a VA loan here at Neighborhood Loans, because we know how important it is. So for your clients, they don't have to do it themselves. Lots of companies are like, oh, get your certificate of eligibility. You go over there. Well, it takes 5 minutes to do the work to get them that piece of information. It's just part of a pre-approval. It's an extra step relative to any other loan type, but it's a necessary step to do a proper pre-approval for this loan program. And so I would also tell you, if you're the listing agent on a transaction, someone makes you a VA offer and they send you a pre-approval letter, first question for the loan officer is, have you seen the certificate of eligibility? Can you send it to me? That's not private loan information. The veteran should have no problem sending the certificate of eligibility. They should be able to tell you yes like that. Should be no problem. And then you can rest easier in terms of accepting that transaction.
So question for you,
Yeah.
and this is great. As much as we're teaching, I'm learning as well.
Sure.
a disabled veteran can get a reduction in their real estate taxes, you said?
Yeah, or elimination, depending on how
Elimination.
disabled they are. So
So depending on
Yeah.
taxes, those $500, $600, $700 can now go towards qualifying for a bigger purchase.
we're going to talk more about that later.
Right, okay.
All right.
So just making sure
Let's move
everybody
on the
heard that,
screen.
right?
But yes, the answer is
Okay.
yes.
Yeah, I learned
Okay.
something. Thank you.
So things I want to drill into over the next 45 minutes are the concerns folks have when they are talking about VA loans. These are myths that exist about VA loans. First myth is that a veteran is putting zero down, they're a weak buyer. VA loans are harder to get through underwriting. VA loans take longer to close. The seller has to pay the veteran's fees. You can only have one VA loan at a time. Appraisals are tougher, and VA loans are less likely to close. Has anybody heard any of these? It's okay to admit it. Fine, Pete, not you. You know better already. I've only been here a month. None of these things are true, and we're going to talk about them in detail over the next little while. So let's move on. First one is zero down is a weak buyer. Hit it again. That's not true. Here are some basic details on this. In 2022, FHA buyers, the average score was 658 on a credit score basis. The average median household income was $68,000, and the average loan amount was $232. That is straight from 2022, the last year that the data is available. The veterans for the same year, the average credit score was 746. Military veterans often leave service and do well in the real world. The average income was $101,000, 30% higher than your average FHA loan. And the average loan amount was $343,000. So that's not a weak buyer under any circumstances. The other thing I would argue is it's okay for veterans to be able to put no money down. Too often, who here has heard or has said, it's okay to admit it, we're in a safe spot, hey, they don't really have any skin in the game because they're putting zero down. Anybody hear this? I've heard this. It's been feedback that I've been given. And the thing that I would say about that is, look, at the end of the day, they're really %, keep that money liquid for home repairs, to buy the next car, to send their kid to college, or whatever they need their cash for. And they can then turn around and keep the money available to make their payments. Why is making payments important? Well, we know that's how loans go bad, right, for lenders. The average portfolio in 2022, FHA loans were delinquent at a pace of 8.22%. Conventional loans, not bad, 3%. VA loans, less than 0.75%, 0.63 of 1% of those loans.
Hey, Dylan, hold on. Can you guys, it looks like your phone muted. Can you guys hear me? Oh, they said it's back.
I haven't touched the thing.
Here, trade microphone.
You want it? There we go. All right, let me know if it's an issue. Maybe it's because I stepped closer to the board. Okay, so these are the default rates on these loans. One of the things that's exciting for me is when we get the opportunity to work with a veteran who, again, sometimes will have a higher income. They also can get qualified at a higher debt to income ratio than you might normally. So most loans, particularly a conventional loan, will stop out at a 49.9% debt to income ratio. Now, don't get me wrong, there's a personal financial discussion, a personal finance discussion about whether somebody should be at 49.9% of their gross income in total payments. But if this is the right house for them and the veteran is doing better financially, the VA loan is not underwritten to a maximum debt to income. It has what's called a residual income cash flow component. And so there are some calculations that we do in the approval process and pre-approval process that, depending on the square footage of the house, there's an allotment for repairs. Depending on the age of the kids, there's allotment for childcare, and those calculations come into play. So if you have a higher income borrower, They may qualify with debt to income ratios as high as 60 or 65%. That's an approvable loan and can get to closing. And so those loans are okay from a cash flow basis, and again, in the pool, are performing at a higher level. So the other latitude we have is different marching orders, if you will, for underwriters versus a conventional loan. Conventional loan, underwriter will say, this doesn't work. Like that's just the math. These are the rules. The fact of the matter is, underwriters are encouraged to consider all sorts of things. Every possible appropriate factor is the exact language. The VA loan program is designed to get veterans into homeownership. And so as long as an underwriter can justify the decision about what they did in the loan relative to the information at hand, they will not be questioned by the VA on the back end. Now, remember, the VA doesn't write the loans, they insure them. So one of the things that every lender has is some recourse if it were to go to foreclosure to go back, but it's an insurance policy, right? Much like PMI or FHA insurance. It works very much like that. And so because of that, you end up in a situation where the VA gives latitude to the underwriter to make some decisions. Now, that doesn't mean the common sense lending goes out the window, but what it does mean is really common sense lending comes in. And that's really an advantage. So again, as long as they document the reasoning, the VA is not going to really have a problem with what underwriters do. Lender overlays. He who makes the gold makes the rules. Lenders can have additional guidelines. We don't have very many here. And in my experience, lenders don't want a lot of overlays on VA loans because it puts you in a situation where you're at a competitive disadvantage because other lenders will do them. So for the most, we're talking about other at two ends of this spectrum, right? For the more financially capable veterans, the opportunity to gain home ownership at higher debt to income ratios comes into play. But for the more challenged, the folks who've had some credit challenges or just got their stuff together over the last year or two after a challenging time, there's some latitude to get them into home ownership that might not exist in other loan programs. So I want to talk about 3 quick stories about how I took advantage of my understanding of the guidelines in the last few months to get veterans to closing. So the first one is literally from December 18th. We were sitting at a closing, loans approved, clear to close, ready to go. And I had my conversation with this borrower who was in the midst of getting divorced. And that is a very common conversation, right, that we all have or should be having as lenders and reinforced by you as real estate professionals with our borrowers, with our buyers. And that is, don't change anything with your personal finances, right? So we're going through, we're sitting at the closing, we're all minding our own business, and his attorney sticks the document over that says, hey, this says you're still married, and by the way, where's your wife? Because she needs to sign the homestead waiver. Like, we talked about that a week ago. He's like, well, we didn't want to do that, so we just got divorced last week. Like, what do you mean? Not only did he get divorced, he agreed in writing to pay her $2,000 a month in support. And so we left the closing without closing that day. But what we did was we went through and we did some math. And we were able to, over the course of really about 10 days, because of the holidays and the break and all that stuff, he was buying a 2-unit. We were able to qualify the rent for that unit by going back and getting some more information there. We were able to turn around and he threw some money at his car payment to get it down under 10 payments so he could still qualify without that car payment being counted against him, and some other moving targets to get done. The fact of the matter is that loan qualified on a residual income basis. The debt to income ratio was over 60% after the $2,000 got into his debt to income ratio. For a conventional loan, for an FHA loan, we're not coming back to close it 10 days later because the debt to income ratio is blown. But for the VA loan, we're able to save the transaction because it was qualified on a residual income basis. Now, he's lucky it was qualified on a residual income basis. but it was, and we were able to make it happen. Second thing, Juan, back to the point that you made earlier, we had a borrower recently who was buying a 3-unit in the city. And he, again, high debt to income ratio, kind of paying a high price for units in the city, or, multi-unit building in the city proper. And we were able to qualify him at a 58% debt to income ratio because, and only because, we were able to take his disability and then send him to closing with the document that applies for the property tax waiver going forward, file that on site with the county at the closing, and not qualify him or count the property taxes against him in his qualifying. So that got him to closing without having to qualify for the taxes. Even though the waiver had not been in place yet, we were able to get him to the table because we were certain it was coming based on the documentation. The final one is we turned around and got a loan I got a loan in my book last November, and they found a house and they needed to get in before the end of the year. So they run through all this stuff, and it's a couple, the veteran and his fiance had been together for years and years, right? Like 8 or 9 years. And so they put the whole thing together, and we look at the math and we do the calculations. We run the pre-approval through automated underwriting. And this next result is not an uncommon experience. One thing that happens is that he's qualified to put no money down, and the VA will insure that. But she's not, because she's not a veteran. And so because they're not married, she had to put 12.5% down. Or they go get married, which they did 2 days before closing. And so we just conditioned them for the marriage certificate at the time of closing and sent them off to closing. So it was no problem, no issue to get them done. So there's a lot of ways to make stuff happen for the veteran in that type of situation. So that's really the 3 big wins that we have there. I'm going to slide over and move the screen. Oop. All right. So we've talked about VA loans being harder and VA loans being zero down, being a weaker buyer. Not true. Let's talk about longer to close. On average, 99% of all lenders have automatic underwriting authority. We have that here, which means we don't have to send it to somebody else to kind of verify or validate our VA loan results. We get to make that decision here internally. But one of the location benefits you have is those folks are here in our office. The average turn time for VA loans is 32.9 days nationally. It's as fast or slightly faster than FHA loans. But here at Neighborhood Loans in 2023, we closed the average VA loan in 27.9 days. So it can go just as quick or more quickly than anything else. All right, next thing we want to talk about is the seller paying the veteran fees. There's a whole list here. Look, let's talk about these things. The following fees are always unallowed. There are 2 ways we can charge the borrower. Let me actually back up. One is we can charge them 1% as an origination charge. Or 2, we can charge them the actual fees. It's always cheaper for the veteran to charge them the actual fees. It's always easier to just charge them 1%. So most of your call center lenders, what do? They charge 1% because they make more money. We want to charge the actual fees. So the following fees are unallowed if we charge the 1% fee. Otherwise, the veteran's going to pay them. It's the appraisal. It's our lender's inspection of the property, which is basically a condition inspection, and it's wrapped into most appraisals, right? Which is, hey, the safety issues like railings and windows and painting and scraping and that sort of stuff that often comes up. And look, conventional loans have condition warrants as well. Let's not kid ourselves. It's not really an issue. Underwriting or processing fee, they don't want us to charge that. Application fee, we can charge folks just like other loans upfront for the cost of the appraisal and the credit report, but that's it, right? There's no other upfront fee. The termite inspection fee, like that's been a radical conversation. I've had so many arguments with folks over the years. Like, we don't want to pay for the pest inspection. It's $75. Like, it's not a big deal. And this brings me to the other segue. They cannot pay buyer's agency fees. But that's a conversation, and I've been on a couple of blogs and forums and conversations. The government at the congressional level is already having this discussion. And the question at hand is, right, are we going to be able to charge that fee? Just like the question at hand for every other transaction that you have now. The answer is we don't know. As it's structured currently, to protect the veteran in the way the system has existed up till now, they can't charge a separate buyer's fee. So it just says you can't pay a buyer's fee, which means if you work at a shop that charges the buyers a $3.95 admin fee, can't charge it. Can you charge the buyer later as a veteran buyer? Well, that remains to be seen down the road. Question is, what's it all going to look like? It's the same question we have on every other loan. But just understand that if you have a buyer's fee, that they're not going to pay it. And so are you going to eat that out of your commission? Are they going to eat it out of their side? That's a negotiation point. But the veteran is not allowed to pay a buyer's agency fee.
But it can be negotiated for the seller to pay.
Sure, the seller, right? No, right, exactly. The seller could pay it. The selling agent could take it out of their commission. You guys could split it. There's a whole. I mean, it's usually it's $400. The thing is, just can't be charged to the veteran. It's the bottom line. So, but otherwise, you're not paying all those fees. The veteran is paying all those fees that we just went down the list on. So it's not more expensive for your seller, except maybe if you have this transaction fee. So, all right. We've solved that issue. Veteran eligibility for a home loan is determined by what's called your entitlement. And I won't get into the math here today on entitlement, but the thing I will say is part of your pre-approval process is for us to figure out how can you qualify. There's basically some alchemy math around $144,000 as a 25% insurance, et cetera, et cetera. And so the thing is that if a veteran, for example, is moving from another market and they bought a $120,000 house there years ago, and they're going to own that house as a rental property now that they're moving to our market, well, they still may be able to take advantage of their VA home loan benefit. It's a math problem, and that's really the issue. The other thing is they may be able to take advantage of it where they get no money down up to a certain level, and then they just put 25% down over that. And so they may have to put down 25% of the last $80,000, but buy a $700,000 house or a $900,000 house. Happens all the time. So this is the Certificate of Eligibility, the COE. It provides all the information we need as a lender to get determined or to determine whether or not the veteran is eligible. It tells us their information. As a real estate professional, what I want to share with you is that you know what this form looks like, right? Literally, Department of Veteran Affairs in the upper left-hand corner, in the upper right-hand corner, Certificate of Eligibility. That's it. That's the document. If they have it, you're good. Period. You don't need to know the details. We do. Forward it to us. We absolutely need it. Pete?
So the one thing I've gotten questions on, like not so much the one at a time, but let's say they have a VA loan now, they're selling that house. They're like, oh, I can't buy because I don't have enough.
Not true.
Restored, right, automatically, simultaneously.
Right. It'll simultaneously be restored. There's, again, that's our math, but yes, that's easy enough for us to do. So this is the form. So just be aware that if you're asking, hey, do you have Certificate of Eligibility? Can you send it to me? That's it. That's the one. Yeah.
It looks like it's been filled out, where it says VA loan number, loan amount, date.
Yeah, this is a one from a borrower who already has an existing VA loan, and these are the details of that loan.
Who filled it? Like, okay,
So when we go and pull this from the VA,
that's blank.
No, not always. So this is not a first-time buyer. Let's do that. Because it's not a first-time buyer, he has a previous existing loan, and that's the details on that loan. So to Pete's point, we're going to have to get rid of that loan to get our new loan insured.
Got it, but most certificates will have that blank.
Blank, yes,
Okay.
for sure. So, but again, that's why we don't want to bog you guys down with the details. Like, that's our lane. we'll be happy to own that. So, all right, who's eligible? I can send this chart along if you're interested in people from World War II, Korean War, post-Korea, Vietnam, Persian Gulf, etc. Here's the big issues. I'm gonna make sure I'm standing in the camera. If you've been on active duty for 90 continuous days, 181 during peacetime, you're eligible. If you're in the National Guard for 6 years and you have 16 points, points are basically on a military scorecard that is part of your service record. We pull that. You don't have to worry about that. But the certificate of eligibility, sometimes you get a person who's been in the National Guard 4 years, they're not eligible. And then if you're an unmarried surviving spouse or a POW MIA spouse, there are some rules around that. If you've not remarried as a spouse who's in that unfortunate situation, you can take advantage of your spouse's VA home loan benefit to buy your place. And again, we can figure out that eligibility for you as part of the certificate of eligibility. But there are some hard and fast rules as to why they're eligible. You don't have to ask the veteran what scope of service were they in. The COE tells us. But this is what's behind the COE for your information. All right, bottom line. Veterans eligible. 2 unmarried veterans, each one can use half of their entitlement, or they could use all of the entitlement of 1 veteran. Veterans and their legally married spouse, that gets back to that wedding I talked about from last fall. You'd be amazed at how many people decide it's time to get married when they have to put $40,000 down on another piece of property they don't have. The unmarried widow of a veteran and additional borrowers can be added with a 12.5% down payment. The thing I would tell you about that 12.5% is in the real world, it ends up being about 14.3% in cash because they also have to fund some of the eligibility fee, right? So even if the veteran is disabled, they won't get a full waiver of the funding fee. Some of that funding fee will get added on too. So it's 12.5% of the purchase price down, plus some of the expense associated with the loan. 12.5% on paper, 14.1-ish in the real world. And we have to have owner occupancy on our properties. We can't buy rental properties for veterans. Now, again, they can live in it for a year, they can move on to the next place. That's great. And it's certainly, we've helped veterans buy multi-unit properties, no money down, all the time. We can have more than 1 VA loan at a time. In fact, one of the other myths we have is if you've had a VA loan go to foreclosure, you can never have another one. And the other thing is that the VA loan, it has a max loan amount. None of these things are true. I discussed earlier, but I'll say again, you can, for example, have somebody who moves from one market to our market, they're leaving a VA loan behind. As long as they have a portion of their eligibility left, they will have the ability to get another VA home loan. It will cap out their no money down maximum at a lower number because their entitlement is partially used on the first house. Again, that's pre-approval math for us to do. Don't want to bore you with that here today. We go back. I want to give a little more detail on this. Oh, here's the math. Yeah, if you're interested in the math, we'll do that, but that's a little crazy. All right, let's go back. There we go. Nope, that's still
Backwards? Backwards.
Oh, we are going to do some math. Okay, there you go. All right, if you foreclose on a loan, in essence, the lender will file a claim against your entitlement. And so the VA will then pay that out. You can get reestablished if you make the VA whole. So whatever their losses are on your insurance, they lose $50,000, you got to pay them the 50 grand, but you can do a VA loan again. It's usually not 50, but the point is that if you make the VA whole, you can get a VA loan again. You're not one and out. But obviously, people who have historically, I think people are always entitled to second chances, but yes, we don't want to have people who have a history of going to foreclosure signing up again. So the answer to that is yes. That is a derogatory credit matrix question, not an eligibility question, and it's a couple of years. So yes. So now the question is, when did the foreclosure happen and when was it filed versus when did they make the VA whole? Both of those things are at issue. So that's a deeper pre-approval question, not a specific borrower. And the VA has no maximum loan amount. So even in this market, you can buy a $1 million property with no money down. Veterans can do that. That's the only program that has this available. Everybody else is, as soon as you're over 766,000, right, our conforming loan limit, you're at 10% down for any lender, for almost any product, at a minimum. Pardon? There is no maximum loan amount. At the conforming loan limit. If you're over 766 and you go to a jumbo loan, every jumbo lender is immediately going to demand 10% down. True or not true?
True.
So because of that, you can now have lower down payments all the way down to 0 on a VA. So that will give that borrower less down payment option available. All right. I'm going to buzz the tower on the math. Basically, yeah. So their entitlement's $144,000. So the VA will provide $144,000 of insurance, which means 4 times that, or about 512 or whatever it is, will turn around and be easily insurable. Then there's a bonus entitlement. Again, this is all pre-approval math for us to do. We just want to show you that we have an awareness of that math and the ability to get everybody through it. So the veteran is only, this goes back to my example here. So let's say that we're going to have a max loan amount in a situation from an entitlement standpoint at 510. House is listed at 100,000 over at 610. Do they have to put the 100 up? No, they only pay 25% of the difference. So again, this is only based on where their entitlement is at, not that it's a maximum loan amount. All right, let's talk about the likelihood of VA loans closing. I love this screen. So this screen talks about, I don't know why it says Atlanta, it should say Chicago. But anyway, 24% of contracts fall through, 23%, 27% overall. Let's move on. We cancel VA loans at a lower rate than any other loan, right? FHA, 12% fallout. Conventional, 11% fallout. USDA loans, which we don't do a ton of around here, but nationally fall out 11.2% clip. VA loans fall out at a 7.25% clip. I would argue that your VA home buyers more committed, understand what they're doing, and want to get into the deal. So these are the 6 questions that always come up in VA loans. I think we've kind of dispelled the myths around those. Let's talk about VA appraisals, because I think this is the biggest advantage that we can create for our veterans in the VA loan process. And that is Tidewater and the reconsideration of value. In a nutshell, the appraisers are required to give us a heads up warning. Now it's a fire drill as soon as this happens, that they are going to struggle to meet the contract purchase price on the appraisal. So if we're selling a house for $600,000 and they don't have comps that are $600,000, they call Tidewater and we have 24 hours to get them additional comps. So then when that happens, we are absolutely in fire drill mode. What do I mean by that? We have 24 hours to get them better comps. And they're not kidding around about that. They post the Tidewater notification to the portal. And if they post it today, it's 2:45 p.m. now as we're talking about this. At 2:46 p.m. tomorrow, it's over. And if you haven't responded with additional comps, then we're just moving on and they're going to accept it. Go ahead.
Does the VA have their own appraisals?
The VA does not have their own appraisals. As a matter of fact, that's a great question and a myth that kind of exists out there. Appraisers just add the ability to do VA work under their licensing. So they have to go through some extra hoop jumping, some extra classes, etc. But once they're certified, they just get ordered in the same way. The same appraisal companies that do our conventional appraisals, do our FHA appraisals, they're going to do the VA appraisals.
Right.
So, all right.
So as agents, can you see the value of getting a warning that, hey, we have a value issue before the appraisal's done? Normally it's like, hey, the appraisal's already in, and now we have to change their mind after they put it in writing. That's
really the mindset, right? So the appraisal, again, from the spirit of we're all here to get the veteran into the housing, appraisers, when they're doing their job right, are in the same mindset. And that is, hey, we are going to struggle to make this value. What do we do? So phase one, we have not been given the value in that yet. They initiate the Tidewater alert, and we have time to turn in 3 comps, right? It is 24. It is 24. Somebody's typoing wrong. So phase two, once the appraiser receives those comps that support the purchase price or comps that don't, right? They're either going to support the purchase price or not, and so that's the story. Then they turn around and they issue the value, and they either increase it based on the comps or they do that. But that's in essence the process, right? So they put the comps out.
So where does the listing agent step in?
So the answer, it's a great question. So from a process flow standpoint, you're working with a veteran home buyer, and we get you're working with us, and we get notification of Tidewater. That thing's going to go to the portal that's going to notify us here at Neighborhood Loans. You're going to get a blow-up set of calls and emails almost immediately, because now we know we're on the clock. And so that's a conversation for you as the buyer's agent. Then there's a conversation with the listing agent. Then you both probably get on the phone and complain about the appraiser for 10 minutes, and then we have to turn around and get the comps, right?
But also the buyer's agent, I'm just trying to think about being a buyer's agent for the veteran, probably be smart to do the comps before you submit the offer. Not meeting, because it's going to be that high water situation. So shouldn't I negotiate before?
I would argue that you're having the same conversation that you are on any transaction, right? And that you would do that for every buyer. Like, what are we going to offer, and are we going to offer too much? The advantage, putting the cart before the horse here a little bit, but let me say this and then we'll circle back. The thing I like a lot about our no money down option for the veteran is in a situation where, and we know this, sometimes there are no comps, using our example, over 600. They're all in the 5s, and everything's adjusted 595, 598, like we just can't make 6 happen. But if you have a veteran who's buying no money down and they have other cash, because again, by definition, they're not a weak buyer, right? They're just not a down payment buyer. And so they now have the ability to fund an appraisal gap because they don't have to fund a down payment. And so that's an additional negotiating tactic and benefit. So I would argue, if you're representing the buyer, that the idea that having a discussion with the veteran as to how comfortable are you with me discussing your ability to fund an appraisal gap, which is a conversation you still have with a conventional buyer, right? Like, we don't want to pay more than 15 grand more. Like, that's very common in this market. The veteran can do the same, but he doesn't have to concurrently fund a down payment in addition to an appraisal gap. Only has to fund the appraisal gap. And that's a benefit of the VA loan. So sorry to go off track. So again, the lender sees the appraisal back from the appraiser. Once that's done, then we have it reviewed internally to make sure that the value is there as well. And then the veteran, and we can coach the veteran through this, they request a reconsideration of value in writing. Oftentimes that second stage, when we go to get a reconsideration of value, will help. I've been willing to get on the phone if we have a solid argument with the regional lending center, which is where the VA takes care of this. Be the one that makes the $600,000 figure happen, or 605, or whatever the number ends up being. And it's because the VA and the regional lending center have the mindset that we want to get the veteran into housing. And so a 1% adjustment from 598 to 603 or 605 that gets the veteran into the house, they might be okay with. Again, if we've done all these other steps. So, all right. Let's talk about sellers accepting those offers.
Question for you.
Yeah, please.
I've been in the business about 25 years. I have never in my life ever had an appraiser give me a heads up that the place was.
It is required by rule in this transaction.
Perfect. That was my question. Okay.
Yes,
Okay.
it is required. So that's one of the advantages that we have in working with the veteran home buyer, is it's not just a courtesy. It's required. Yeah.
Does it come to the agent or to you?
It comes to us here at Neighborhood, but then you're going to know 10 minutes late. Like we'll have that conversation, we'll pull it down, and you will immediately hit fire drill mode.
But again, it's specific to VA.
Yes, for sure. All right. So why should sellers take our VA offer? Well, again, they don't have lender overlays that pop up and surprise us, right? And so those things can come into play. Zero down does not automatically mean inferior buyer like it may in an FHA loan. It doesn't mean they have lower credit scores or less money in the bank or anything along those lines. We've talked about that here today. I just mentioned we can handle that appraisal gap with cash, because if the buyer has that cash and doesn't need it for a down payment, we can do that. We have the options to turn around and go to bat and fight for the appraisal like we talked about. So again, these are advantages for sellers. And one of the things in my role here at Neighborhood personally, again, no matter who your loan officer is on our team, my role here is to help veterans. I will get on the phone with the selling agents and explain this stuff. And if it still doesn't work, I will guilt them about not working with a veteran when all other things are being equal. Don't think I'm above that, because I'm not.
It's a benefit they earned.
It's a benefit they earned. I have, you wouldn't like me much if you tell me my veteran is an inferior buyer because he's putting no money down and you're not going to accept that offer. You're going to get an earful. But it usually doesn't come to that. Okay, so how do we do this? You got to adapt your skills for the military buyers. Folks who've been in the service, if it's 2 o'clock, it's 2 o'clock, right? We got to go. And so if it's time to buy a house, they're ready to go. Like, let's have that conversation. Let's get them pre-approved. It wouldn't be surprising if you have an absentee spouse, if somebody's on active duty, right? So sometimes you'll have you'll have one service member deployed and their spouse is in charge of getting the house. And so you got to navigate through that. There's probably some FaceTime and some time lags and some time zone stuff and all that. Make sure you've got your local knowledge down. PCS is the annual reassignment of military veterans to different locations around the country. That's kind of the easiest version of it. PCS happens about this time of year, and it puts them in a spot where they have to move, and they have to move by a certain date. They got to show up at their new duty assignment. So, again, virtual showings can be really, really serious at that point rather than just tire kickers. So just be aware of that as well.
Dylan, is there any concern or complication when you've got a qualifying borrower overseas, active duty? What ends up happening there?
What ends up happening is the spouse goes and signs. They might sign with a power of attorney because of the deployment, but deployment is a legitimate reason to have a power of attorney.
But they're qualifying on their.
They can qualify on the spouse's income. Yeah, that's no issue whatsoever. That's the family income, right? Like that's just like any other situation. All right, common military terms and acronyms. We talked about Certificate of Eligibility. I'll get this screen out to everybody. There's no point in running through that. The phonetic alphabet, people will turn around. You start working with military. You're grinning. You should be aware of this. Every letter of the alphabet is assigned in military lingo a particular word. And so when they turn around and respond to you in kind, do that. Don't do it incorrectly. You'll look like a rube. Folks in the military can see through that crap. Believe me. All right. So this is my contact information, my phone number, my email. If you have questions about any transaction that you are working on with any member of our team, I welcome the chance to help you get veterans into home ownership. So from there, that's my presentation. I'm happy to open it up to questions. And then if you want to talk about marketing, we can go from there.
All right, Dylan, I do have a question.
Yeah.
So one of the things that does come up sometimes when you present an offer for a VA is the seller being concerned with cost that somehow end up on their side. I didn't notice that as one of the myths really like that, but I'm sure for every person it's different. But is there an average?
There are no additional costs that end up on the seller. No,
No
none.
lender costs, no fees, nothing that.
Nope.
Well, pest inspection.
So then it is a myth.
Pet. Yeah.
Right.
The only thing that we have to pay, or my sellers have to pay, was the inspection.
The termite inspection.
Termites.
75 bucks. Yep. And in theory, if you talk, some home inspectors do double duty. And so if you bring your home inspector in and he's licensed for pest inspection, he can just and put it on the home. And now it's part of the home inspection. And then the veteran could pay for it that way. That's the one worker. And again, it's 75 bucks. Like, are we going to not do business with the veteran over 75 bucks? The answer is yes. I would look to find a home inspector who could turn around and wrap that pest inspection into the home inspection. Add 75 bucks to the home inspection fee and call it a day.
And was it ever at one point?
It was years and years ago. Years
Of course,
ago.
I've been in business here.
Yeah, it's been a long time. So that myth still exists because there's a kernel of truth in it way back in the past. As the kernel of truth about VA appraisals being more difficult,
Right.
which they were, but they're not now.
So it's just,
There used to be a big cure list, and one of the things that 20 years ago, 25 years ago, they were like, you can't do these VA loans and they'd come back and be like, you gotta repair the entire back porch, right? You gotta rip it off and replace it, or we can't do this loan. You're like, well, I'll sell it conventionally. Doesn't exist anymore. Does not.
So, couple things. Can you touch on multi-units with VA?
Yes. So just like conventional and FHA loans, veterans can buy an owner-occupied multi-unit up to 4 units, live in one, use the rents from the others to qualify. Simple as that.
Okay. We got a question online. Veterans that refinance their original loan, does that mean the loan is paid and it can be used again?
So that's a little bit of a trick question. The answer is it depends. And so let's talk about a couple of things. Thing number one is if you refinance your existing VA loan or you go get a conventional loan for some reason, in theory, yes, it frees up your entitlement to go buy another house with a VA loan. However, you have to go through and make sure that your VA loan that your entitlement is released with the VA so that it makes its way to your certificate of eligibility, which isn't necessarily as automatic as you would like. Door number 2 is the VA has a loan program called the Interest Rate Reduction Refinance Loan, otherwise known as an IRRL. An IRRL is a quick and easy refinance that is available if they've been in the house and made 6 payments and they've been in 210 days and the rate is a certain percentage lower and they save a certain amount a month. And again, we have the chart with that math. They can refinance and they can be unemployed. They just call up and they're like, hey, we'd like to refinance, and you get that done. Because if they've made their payments, they can, it stands to argue, common sense lending again on the VA side of things. If they've made a $2,500 a month payment, stands to reason they'll figure out a way to make a $2,150 payment or whatever the new lower payment is. So that's the story. All right, what else can I answer?
So do we have any more questions here or any other questions online? Put it in the chat, please.
Awesome.
Right. How many of you guys have worked with VA buyers before? All right. So, and again, I think in the spirit of VA, the whole purpose of all of this is how do we get more veterans into homes?
Yes.
Actually, I do have a question.
Yep.
All right, so there are some companies out there that kind of make themselves out to be like the main.
They represent themselves as being affiliated with the government,
Yeah, they kinda
perhaps.
make it seem like they're the specialist of the VA
Except like
program.
US.
Like if it
Like USAA. I had
you
that
said it, not me.
I had that situation happen with
Yeah.
my son. He just bought a house, and I referred him to Juan because, Juan and I have been doing business for over 20 years. And for the life of me, I couldn't convince my daughter-in-law to do this. He was all like, okay, yeah, sure, but,
The answer.
The reason why they decided to go there, because she kept saying, oh, no, these people are specialists. And, to my knowledge, it's like anybody could be a specialist. You don't necessarily need to graduate from VAU to know that, right?
Right.
But I couldn't get past that, and so it made me think, like, is there such a thing? Like, which
I was a USAA agent at one time.
okay, so
Many
is that
years.
true?
Sure.
But it was a train wreck to deal with.
Oh yeah, no. The point is that And I mentioned it earlier, those are call center shops. So you mentioned USAA, one of them rhymes with Gravy Federal. Those companies like that are wrapping themselves in the flag, but if you walked around, it's just another mortgage company. They are wrapping themselves in the flag from a marketing standpoint and spending a lot of money. Look, you know there are only two ways to do business, right? Whether it's your real estate business or our mortgage business. There are only two ways to get business in the door. You spend a lot of money to make the phone ring, and you pay the people who do the deals very little, right? So whether that's Rocket or Redfin or whoever, you pay less in commission and more in marketing, or you work by referral, and because you can generate business, you turn around and don't have to spend that money on marketing. But the math is it's 6 of one, half a dozen of the other. There's on one level, there's no right or wrong, right? A business model is a business model. If it brings in business, it works. But I would argue that, especially given the expertise necessary to execute VA loans, it's a bad business model for the consumer because it can get sideways as soon as your loan is not vanilla, much like any other call center.
But there is no specific company.
No, nobody is endorsed by the government as the preferred lender for veterans. That's not a thing.
Got it. Thank you.
Yes.
I have another question. So, being on the listing side, I'm a newer agent with 4 years in business, but I did not know that there's like this negative stigma with VA loans. To me, that was just like any other loan, and I didn't even
Good.
know that
Keep thinking that.
Well,
Yeah, no, that's the way to go.
Negative to me was just like, okay, well, it's a buyer with a loan, right? And what the buyer's representative did, she said, hey, I've been working with VA loans quite a bit, and I'm very familiar with what they are looking for in inspections. Actually, I'm an inspector myself, and she kind of put me at ease. I was like, well, do you mean that they are more like stricter on what they want? She says, yeah, some stuff. So what was she talking besides the termites?
You know what she was talking? I would like you to cut the price another $1,000. That's what she was talking.
Is that
Yeah,
what it
it's
was?
a
I mean, they weren't.
bullshit argument.
They weren't. They weren't negotiating much more than what they initially asked for. But
I would.
pointed out if you're gonna fix it, 'cause my sellers were investors. So I said, hey, just tell me what's wrong. We'll fix it. No problem.
I'm not really buying that argument that much, although I applaud her creativity in going to bat for the veteran home buyer.
Like any other property, like any other program, and again, I think there's a big misconception that conventional loans don't care about property condition, and that's absolutely not correct, right? So with all appraisals, again, people are borrowing hundreds of thousands of dollars, and the collateral they're using is this house. If the house is in good condition, hey, they don't pay, we take it, get sold, right? If it's in poor condition, you can't just take it and sell it, you got a problem, right? So the biggest issues that we see in valuation, and Dylan, you can correct me if I'm wrong with
Sure.
VA, like any other program, it's all about health and safety, right?
You're exactly
If there's
right.
health and safety issues, VA is concerned, FHA is concerned, and conventional is concerned, right? So you got sellers who are looking to sell the house, then health and safety is something that should be addressed. Scraping and painting, the railings, I don't know, the trip hazards in concrete, stuff like that as an investor you'd be thinking about. The next buyer is thinking about it. It doesn't apply to VA loans, but if you've got houses that have health and safety issues, hey, guess what? We love renovation loans, right? We do home style and 203Ks all day long. But for your traditional properties, health and safety, they have to be in decent shape. Carla?
So while we're on that track, if I have a VA buyer and he's looking at a home that could potentially need a renovation, would you suggest he do either a home style or a 203K and then refinance into his VA? Or how would you suggest he tackle that?
I would suggest that if he needs a renovation loan, he look at a renovation loan solution first. And odds are, you know where I'm going to go with this, and you correct me if I'm wrong. Odds are, if they do a 203K loan, that those loans generally are tracking at higher interest rates than your average loan in the current market. So odds are, after they do the work 6, 8, 10 months down the road and they're done, they'll be looking to refinance. That'd be a great window to step into a VA loan at that point in time.
Right. So So again, on a 203K loan, we want to buy it and fix it, untap that hidden equity. Now all of a sudden, hopefully they have 20% equity. We can refinance them out of that FHA loan into a conventional loan, no MI. Could be the beginning stages of an investor client, because now they can keep that property. They've refinanced it out. They can keep it as an investment, go buy another house, no money down with a VA loan, and it's legit across the board.
You just said 20% equity down, assuming they put in 20?
No.
No, that's if they
Go back
build
to your-
equity through
go
the
back to your
renovation loan.
investor
So we're,
thinking.
yeah.
Right, we're gonna buy it cheap because it's in bad shape.
And then
Right.
after the renovation,
Fix it up,
more equity,
and it's worth more.
Right.
and then we
Exactly.
Correct.
So,
Yes, sir, Pete, you ready? Okay. All right. So we've got our videographers in the studio room. So whoever is ready to create some commercials, let's do some video streaming. Again, we'll be gentle. We'll make it nice and easy. They've even made us stars. If they can make us look good, I promise we can make you guys look good.
fantastic. So we're gonna
let's,
wrap up the
let's-
broadcast.
Yeah, we'll wrap it up.
And then for everybody in the room, I have my card here. Again, no matter who your loan officer is on this team, I'm here to help you close more veterans.
I'll take
Right.
Yep.
So thank you, everybody.